Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Thursday, 27 November, London Open. Here are the key themes shaping the session. A quieter tone, with Europe set for a mixed, catch-its-breath start, and a softer US dollar as markets lean toward near-term rate cuts, lifting the yen and the commodity currencies. Meanwhile, China's growth signals stay uneven, keeping a cap on commodities even as risk appetite holds up. European equities are poised for a muted open as investors reassess the regional and global outlook. In the UK, the human side of Budget 2025 is in focus, with households still wrestling with living costs. A reminder that consumption and sentiment will be key into year-end. And across the bloc, Brussels is nudging migration policy forward while leaving capitals to lead on return hubs, a sign of the EU's pragmatic, step-by-step approach. In Asia, currencies are doing the talking. The Japanese yen is firmer near a one-week high against the US dollar, supported by lingering intervention nerves and cautious signals from the Bank of Japan about the pace of normalization. The Australian and New Zealand dollars are bid after stronger local data and guidance that further rate cuts in New Zealand are a high bar, while in Australia, robust investment figures keep the Reserve Bank on watch. The British pound is also edging higher against the dollar, helped by the same US rate cut narrative. Commodities are mixed. Gold has eased off a two-week high, with the downside cushioned by that weaker dollar, and silver is slipping after a three-day run. In oil, the medium-term conversation is turning. Wood Mackenzie says China is nearing peak demand, with gasoline and diesel fading and inventories doing more of the work to balance the market. Add to that today's data showing China's industrial profits fell in October, the worst in 5 months, and the Financial Times reporting that Beijing is pushing hard to replace foreign technology imports. For traders, that matters. Meanwhile, liquidity will be thin. U.S. markets are shut for Thanksgiving, with only a half day tomorrow, and most major data and speeches were pulled forward. Expect quieter conditions and patchier price action into the weekend. Turning to market and sector moves, the softer dollar tone is broadly supportive for risk assets and non-U.S. currencies, while putting a mild lid on the euro area open. Yen strength is a headwind for Japan-sensitive trades, and the precious metals pullback suggests some profit-taking even as policy expectations stay supportive. Oil feels range-bound, with China's storage choices likely to set the tone into 2026 rather than immediate demand spikes. Looking ahead, the calendar is light by design. With the U.S. closed, attention stays on European headlines, any central bank color from Asia, and follow-through from this week's data run. The bigger tests arrive next week with global inflation and jobs updates. What I'll be watching today, dollar-yen, where the bias is for yen strength if policy caution in Tokyo continues and US dollar softness persists. Pound dollar, looking for the uptrend to hold on rate cut bets in the United States. The Aussie against the US dollar, leaning higher on firm investment data, and the Kiwi alongside it. In metals, spot gold looks range to softer after the pullback, with silver under a bit more pressure. And crude, where any hints on Chinese inventory behavior could nudge sentiment. The takeaway, thin holiday markets favor the prevailing drift, but China's slower profit pulse and its push for self-reliance are a reminder that the growth backdrop is shifting, even as policy stays supportive. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.